Hey everyone, welcome back to the channel. My name is Domenico. Today we're going to be discussing TFSAs and how they can help you grow your wealth substantially over time. So the TFSA is actually an account that's available in Canada, and it stands for tax-free savings account. I really don't like this term because it implies that it's used primarily for savings, whereas the benefits really come in handy when you're using it for investments. Alright, so let's get into how the account works. Now, basically, you're allowed to contribute a certain amount every single year, and this amount is called the contribution limit. Every year, the government gets together and decides what this contribution limit is going to be. It has been as high as $10,000 in one year and as low as $5,000 in another. So it really depends on what the government decides it to be. Now in 2020, the contribution limit is $6,000, meaning that for the year of 2020, you're actually able to deposit $6,000 in your account. It is really important, however, never to go above this limit because you will be charged interest on the amount and you're gonna have to pay it back to the government. So let's get into how to calculate your personal contribution limit. So this contribution limit is actually calculated using either the 2009 year or the first year you turned 18. And it's the later of these two. So basically, let's take an example. Let's say you turned 18 in 2012. Your contribution limit would actually be calculated by adding up all the contribution limits for every single year starting in 2012. So that would end up being $49,500 as of 2020. Now let's say you turned 18 before 2009, then your cumulative contribution total would sum up to $69,500 as of today. So we get to that number by adding up all the contribution limit since 2009. Now what this means is if you turned 18 before 2009, you'd actually be able to put in $69,500 into your account all at once. Now there's no set deposit calendar, so you can deposit whenever you'd like. You can deposit weekly, monthly, annually, whenever you'd like, and you don't have to go up to the maximum. You can contribute as much as you want or as little as you want, just never go above the maximum. So now we're going to get into the benefits of the TFSA and why every Canadian should have one. Now, number one, all capital gains and interest accumulated in the account are non-taxable, meaning let's say you invested $6,000 and it became $10,000 by investing in the stock market. Well, when you withdraw that $10,000, it is not taxable. Usually you would be taxed on that $4,000 capital gain, but in the TFSA you are not, and it's completely non-taxable. This makes it much easier to compound your money over time, and it'll help your money grow faster and faster over time if you leave it in the account. Now, another great feature about the TFSA is that you are able to recontribute any withdrawals you make in the next year. So let's say you want to buy a house in 2019 and you want to pull out $50,000 as a down payment from your TFSA account. Well, in 2020, the next year, you'll be able to deposit the normal contribution limit of $6,000, which was the contribution limit for 2020, and you'll also be able to deposit the $50,000 withdrawal that you made in 2019. So you're always able to recontribute the withdrawals you make, but it's going to be in the next year. So you're going to have to wait that extra period of time before you recontribute into the account. The third huge benefit of the TFSA is that you can withdraw at any time without penalty. Now, it's not something you have to leave in there and that you're forced to leave in the account. You're able to withdraw it whenever you want for whatever reason without penalty. This is in contrast to the RRSP account that basically doesn't allow you to withdraw unless you want to pay extreme fees. Now that I've showed you the basics of the TFSA account and how it can be extremely helpful in growing your wealth, let's really put it to the test and put it through the compound interest calculator to see how substantial this can be. So let's say you deposited $6,000 in your TFSA account every single year and achieved a 10% annual rate of return in the market. Over 30 years, the value of your account would be just under $1 million. So in this example, you actually only invested $180,000 of your own money, whereas your whole account is now valued at $1 million. So basically you 5x your money just by leaving it in the account and not being taxed on the capital gains. And this is where the TFSA really shines, is that you're not paying taxes on any capital gains, meaning that your money is able to compound faster and faster over time. So you might be asking yourself, how realistic is it to get a 10% return in the market? Well, the total market actually increases by an average of about 8% per year. So if you're just investing in the index funds, you will achieve an average annual return of 8%. So as an individual stock picker, filtering through all these companies, you should be able to choose some of the better companies and filter out the worst ones, meaning that you'd be able to get a better rate of return than the overall market in general. So aiming for about 10 to 15% return per year in the markets is very, very reasonable. Now let's say you don't want to do any research and you just want to stick your money in the TFSA, just stick it in an ETF every single year, the $6,000 in an ETF, and achieve an annual rate of return at about 8% per year. Well, your TFSA account will actually have a value of over $1 million in 35 years. Now, this is without ever having to look at a stock chart, ever to look at news, ever doing anything. All you would have to do is put $6,000 in your account and let it compound over time. I hope this video really helped you out. If you did, don't forget to leave a like down below. It really helps get my videos out there for more people to see it and to help more and more people over time. And consider subscribing to my channel if you want to see more videos about the stock market in the future. Thank you for watching, and I'll see you in my next video.